Buying a home is getting harder and harder, especially if you don't make a lot of money or you don't have a lot to put down. And sellers are getting pickier and pickier, and they're rejecting offers that aren't strong conventional offers. But there's a pretty cool program called the Home Possible program that allows you to make a strong offer and not break the bank. So in this video, I'm going to walk you through exactly what that program is and what you need to do to qualify. So let's jump into it. What's up, guys? I'm Ben Sun. Welcome to my channel. If you've been here before, welcome back. If this is your first time, welcome for the first time. I don't just talk about the ever-changing housing market and mortgages. I also talk about things like personal finance, investing, and real estate. So if that interests you, please hit that big red subscribe button. So first, let's talk about what a Home Possible mortgage is. A Home Possible mortgage is a form of conventional mortgage. So remember just a second ago when I said you can still write a strong offer, sellers are more likely to accept a conventional offer than they would an FHA offer. And this program allows you to write a conventional offer, but it gives you some of the advantages of FHA, like lower down payment, lower credit score requirements, etc. It's a program developed by Freddie Mac, a company sponsored by the federal government, to help low to moderate income borrowers get into a house. I'll talk about the low to moderate income thing in just a second, but it's a program that if you don't make a lot of money or you don't make a lot of money for your area, then you can get into a house for cheaper. And again, it doesn't have much of the downsides like an FHA would. Your offer is not going to get rejected. It looks like a nice, strong offer. So in order to qualify for this program, you're going to need a couple things. The first is going to be credit. You're either going to need at least a 620 credit score, or you're going to have no credit score. If you don't have a credit score, a truly zero credit score, then you're going to have to put 5% down. Stick with me because there's some solutions to this, but you're going to have to put a little bit more down. And if you have a 620 credit score, then you can put the 3% down that we talked about just a second ago. One of the cool things about this program is that if, let's say you and your spouse are going to buy a house together, and your spouse doesn't have a credit score, they can still be on the loan. This is a program that allows you to have a borrower with no credit score on the loan, whereas other loan types would disqualify them for being on the loan, meaning you would have to buy the house alone, which means that you might qualify for a lot less. So let's talk about the down payment. As I said a second ago, 620, you can put 3% down. If you have no credit, you have to put 5% down. But one of the great things about this program is that you can couple it with a down payment assistance program, meaning that you can find a down payment assistance program in your area and they will come in and pay the 3 or 5% for you. And it'll also work with employer sponsored programs. So if you work for a company that gives you housing assistance or housing down payment assistance, it'll work with that. It'll also work with what's called an affordable second mortgage, meaning you can find a program either from a nonprofit or a religious group, a federal home loan bank, or a repayable down payment assistance program. You can find one of those programs that'll also come in and help you pay for the down payment. And if you want more information on how to find down payment assistance in your area, check out this video right here. But don't jump away. Let's wrap this up first because there's some other very important points that you need to hear. So one of the huge benefits of this program over a conventional mortgage or an FHA mortgage is that the PMI is a lot cheaper. On an FHA mortgage, the PMI is usually about $75 per $100,000 that you borrow per month, and it doesn't go away. You have to refinance the loan in order to get it to go away. On a conventional mortgage, you have PMI. Again, it's about $75-ish per 100,000. It just depends on your credit score and a few other things. And that only goes away when you put 25 or 20% down. Now on this, it still goes away when you put 20% down, but it's a lot cheaper per month. And so as an example, if you buy a $200,000 house, it'll automatically go away once your loan gets to $160,000 or your home increases in value or a combination of the two. So if you don't have 20% down to put down to get rid of the PMI in the first place, this is a great way to do it for cheaper. Because just as a refresher, PMI or private mortgage insurance is insurance to protect your lender in case of a foreclosure, meaning it doesn't really have any benefit to you and it's kind of a waste of money. That's why a lot of people tell you to put 20% down. But this is a way to put less than 20% down and do it for cheaper if you're gonna have to pay it anyway. And one of the really cool features is that you don't have to be a first-time home buyer. A lot of programs out there require you to be a first-time home buyer in order to not put very much down. This is not one of those programs. One of the other really cool things is that you can have a co-signer that's not living in the home. So you could have like a father, a brother, sister, mother, whatever, co-sign for you, and they don't have to live in the property. On certain other programs, like conventional and FHA, you may be required to put more money down if you're having someone that's not gonna live in the property co-sign for you. Now, all of that sounds great, but there are two caveats. I'm not trying to trick you, but I just needed you to hear those other points before you hear these. Now, the first caveat, to me, it's not that big of a deal, but some people don't like it. And that's you have to take a Homebuyer or a Freddie Mac Homebuyer training course. It's a free online course. It takes about 3 hours, a little less, a little more. It's kind of self-guided, but it's a program that helps walk you through home ownership and money management. It's required for this program, but again, it's free. Link in the description down below. You can take it at any time. It gives you a certificate that you can present to your lender to let them know that you already took it. But again, it's a free program, it's required. It's just a caveat that you have to do this and some of the other programs don't make you do this. So the other caveat is that you either have to fit into a low income tract or you have to be no more than 80% of the area median income for non-low income tracts. Let me explain. So if you're in a low income area or a low income tract, it's called, there's an eligibility tool in the link in the description down below that you can plug in different addresses to see what area the homes that you're interested are in. If you're in a low income tract, you can make any amount of money. It's based on that area. If you're not in a low income tract, then you have to make 80% or less of the area median income. Again, in the description, there's that link for the eligibility tool. That's gonna tell you exactly what you would need to make for that area and if it's a low income tract or not. So let's look at an example. In the area where I live, Grand Rapids, Michigan, let's just pick a spot here. You can't make over $71,120. As you can see, using this tool, you can plug in any address that you want, and it's gonna tell you the 80% or under median income. So you can just plug in the address that you wanna look at, and it's gonna tell you exactly how much that you need to make in order to qualify for this program. Or you can just have your lender do it for you. If you wanna learn more about down payment assistance programs or what programs might be available to you, check out this mortgage playlist up here. And if you have any questions, comment down below. And most importantly, guys, if you got value out of this video, hit that big red subscribe button, and we'll see you on the next one.